Nima, thank you so much for joining. Where are you dialing in from today?
I am dialing in from just north of San Francisco. What about
Nice.
you?
I'm in Park City, so
Oh,
we're both not in our normal locales. Can you just give people your background and just like what you were doing up until starting Blend?
sure. Yeah. So I was computer science graduate from college. I also during college was a professional poker player. When I graduated, I was like, I want to go and build things, and so I ended up joining a tech company, Palantir. Many of our customers, it was 2008. Many of our customers were at Palantir were financial services companies, and that's what I was brought in to work on was that team. And then quickly, the crisis, the real estate crisis hit, the mortgage crisis hit, and so we were kind of brought knee deep into the mortgage industry at the time, which gave me a real understanding of how much opportunity there was for positive impact with technology. As a technologist, I looked at that and I was like, wow, somebody needs to go and build modern tech for this industry from the ground up.
And the experience of how you built Blend feels somewhat atypical of how many companies start. And I remember kind of hearing the story as we were investing. It almost felt like you came together to solve a problem, but actually honing in on what that problem was somewhat iterative for your team. And I'm curious if you can just walk people through what that was like, how you gestated this idea.
Sure. Yeah, we were a team that had worked together on this mortgage problem at just generally understanding in the mortgage industry, I should say, when we were at Palantir, and we had a general sense, to your point, that like this industry was really was on a lot of legacy technology that needed to be at least looked at and said like, how do we either integrate these things better? How do we build better versions of it? I think what we didn't know, to your point, was how much what the solution would be and how much opportunity there was in adjacent areas. So on the opportunity, I think one mistake we made early on, candidly, was at first we tried to go way too big and way too broad. And we said, we're going to build a super generic platform that can be used for mortgage, but also can be used for any industry, for really any problem. And that's really great. I think founders should think big and like, I don't want to ever make a founder think smaller than they could, because, part of being a founder is figuring out how big of an impact you can have in the world. But what it did for us, it stretched us really thin. And so when we finally focused in on the mortgage industry and then we started iterating, and that iteration was done with lots of discussions with customers, lots of discussions with prospects, lots of discussions with potential different ways we could solve certain things with consumers around the mortgage process. If you've ever gotten a mortgage as a consumer, you realize that there are problems. You obviously don't know all the solutions because bringing together all the technology capabilities in a way that consumers can grok it is not a trivial task. But the problems were pretty common. But that was something that we spent a lot of time on. It took us maybe, I would say, like, I didn't feel like we had product market fit until at least 2 years in. And we weren't even really focused on just the mortgage. I don't say just the mortgage. The mortgage industry is huge. We weren't even focused on just the mortgage industry until 1 year in. And so in some ways, I regret that. But in other ways, I think that was just part of the journey of getting to where we are today.
And I've got a mortgage, and it is, it was probably the worst product I've ever bought in my life. The whole process just felt like the only thing different about it versus like what I imagined it was like in the 80s was email, right? But every other facet of it seemed anachronistic. And I think a lot of people don't know what goes into manufacturing a mortgage. Like, what is that process like? From getting a lead, right? Saying you're interested in buying a house, you want a mortgage on it, to actually getting the loan, right, to the seller. Can you walk people through at a high level what that production process looks like?
I'll talk a little about what it takes to manufacture a mortgage and why the world has different infrastructures today that allows us to manufacture mortgages 10 times better than the way it's been done now with modern technology. So in order to underwrite a mortgage, you need to underwrite the consumer's income, how much money they make, where they're employed, have they been employed long enough. And there's investor guidelines for all this. Fannie Mae and Freddie Mac set the ultimate standards for the industry, and then others have their own variations on that. But the income, the employment, the credit history, the amount of assets that the consumer has for things like down payment and reserves to pay monthly payments for a few months after the loan is closed. And then you also have to underwrite the value of the collateral and the condition of the collateral, and that the collateral is actually owned by the by the person who's selling it or refinancing it. And so that would be, the title process. And so there's a lot of things that have to happen to get a mortgage done. And that means like the things that I just mentioned, the income and employment is one vendor, one third party. That's fairly, could be fairly analog depending on how you do it. The assets, like typically uploaded via bank statements historically. The credit history, actually fairly modern credit histories are things that are fairly, you can pull digitally now and could have done that for a long time. The collateral, the appraisal process, better than anybody else. Like the appraisal process is one that's very, very manual, requires a lot of human labor. The inspection process on the home, similar thing. And then of course the title process, also a very manual, almost county by county differential process. And so all of that stuff has been done roughly in the same way for a long time. And a lot of innovations coming to the space now. There's so many real estate fintech companies and broader fintech companies that are coming in and saying, we can do this part of the process better, whether it's income verification or employment verification or title or appraisal. And for us, I think what the lenders need, and this is where we come in, is two things. One, do each of these processes via data instead of documents so that they can be automated. And the data sources around income, around employment, around assets, around even things like title and property value, they're becoming more and more possible to have those things be done via data instead of documents. And also subscribe, push those things digitally back, like to some counties accept digital recording of title, for example, now.
And when you
do it via data, yeah.
Just on that, when you say done with data, you mean the information is captured digitally, stored digitally, rendered digitally to whoever needs to use it. Is that right?
Yeah, and actually, I would even take it one further. So let's take bank statements as an example. This is a really simple one because everybody's seen their bank statement, but it turns out that you can either give your bank statement to the bank to then underwrite you for the mortgage, or you can just connect this directly with your bank and we'll pull your transaction history as a data format. And then not only will we do that, but we'll intelligently flag all the transactions that the bank needs to review, because they do need to review to make sure that you're not getting any undue gifts or the income matches up. There's certain things they have to review, but that can all be done via systems now. And so not only can we get the data digitally, but we can also evaluate the data as it stands and from source of truth so that you as the lender now don't have to do as much work on that file. So they asked us to do that via data instead of documents. And the other things that the banks really look at us to do is, how do you make this process of all the components I just mentioned come together in one simple platform for the consumer? Because if you have to go to 5 different sources for 5 different things, the consumer means that they're getting a call from their employer saying, hey, is this employment verification I'm doing for you okay? They need to go find their bank statements from their bank portal and do that. They have to get their credit pull and they get a credit notice via Credit Karma or whatever. And so it ends up being this thing where now the bank is going to a bunch of different systems, the consumer is getting a bunch of different pings, and then it comes to actually closing the loan, it's a completely different party, it's the title settlement agent. And so how do we make this a streamlined, simple end-to-end process from what is a pretty complex space? And I think that's the magic now that is possible because there's so many technology companies innovating in the space. Blend ties a lot of them together. We also build some of those components ourselves, and we do it via data instead of documents.
And how do you, when you think about just aggregating and digitizing so much of those disparate data streams, right, or these processes that used to be analog, how you capture and review the data, how do you measure success in that? Is that production time? Is that cost to produce? Is that consumer delight? Like, how do you think about what success means? And how do you know that you're getting better at making the process better?
Well, I think, Blend is a very customer-focused company. And all of our customer, the first true north for them is their customer happiness. Like they're also very customer focused. And so customer success, and consumer NPS is something, that promoter score is something that we track and we have to track because that is the true north. Like if we can't serve consumers in a way that delights them in a very complex process, then we failed no matter how much we move the other metrics and how much we move the needle on those things. The other thing, though, to your point, is efficiency. And so, like it's hard. This is actually a really hard thing to track because the industry is extremely variable in terms of the people. Where there's high season and there's low season, and so they need to bring more people on during high season, have fewer people during low season. And what we basically track with our customers is how much is that variability. And so I have customers tell me stories all the time where they're like, "Yeah, we used to need to double our staff during high season, and now there's a huge surge of refinances because of the rate environment that we're in, as you're probably aware." And like. I had a customer say that their volume is 120% and they have not added a single production staff or fulfillment staff member because they can just handle so much more volume with the staff that they have. because the system is doing so much for them. And that's the kind of stories that get me going, where I'm like, not only are we helping consumers, but the lenders who are ultimately giving this money to consumers, they're able to do things more efficiently, which means long-term, which means lower cost products for consumers, better experiences, and hopefully eventually more product innovation as a whole.
And you'd hope also that, through that automation and through kind of giving leverage to people at the lenders, that leads to better outcomes, right? And better capital efficiency, and like how capital is moving to potential home buyers. And through that lens, I'm curious how you would look at retrospectively the financial crisis, right? And housing was obviously the driver there. And there was a lot of things that went wrong, but I think transparency and data was at least one component of it. How do you think that what we're creating today, or what you're creating today, limits the likelihood that such a systemic failure could happen in the future?
If you look at how the major components of manufacturing and mortgage come together, assets, income, employment, credit, the house value, the house condition, those things all matter. And what happened historically was there still is in a lot of cases, a whole chain of reps and warrants that those things are being accurately represented. And one thing that I'm proud of is this time around, that data is being passed through the Fannie Mae Day One Certainty Program, which essentially reads data from our system to give our customers, the banks, rep and warrant relief on that data, on the evaluation of that data. And then to the Freddie Mac AIM program, these are all for assets and income verification. They're basically verifying income, assets, and employment from our system in real time as we pull that data, which means the lender doesn't have to look at it if they don't want to. Because the data is coming from source and not being altered by any humans, not by the consumer, not by the lender, that means that Fannie Mae and Freddie Mac, who are underwriting a lot of these loans, as an example, they don't have to be worried that data is being misrepresented by anybody. That comes directly from the employment provider or the employment system of record or the bank that's giving the asset data or the credit source that we're getting. And so like that allows us to tie this is another benefit of data, is because data can be managed in a way that you can tell if it's been changed. If we make it immutable, it's impossible to change. The third-party sources who have to access it, like Fannie and Freddie, can access it in real time and say, is this a high-quality borrower? Is Nima actually making $100,000 a year? Does Nima actually have $50,000 in his bank account? And instead of just saying, yeah, I trust you, lender, which I think there's good things about trust, but there's bad things about trust when it's not necessary. In this case, they don't have to trust anybody. Now, I don't want to say that the crisis would have been stopped by this, because I think that there were so many things that went into the crisis, and I don't want to underplay all the elements of it. But I think that in a world where there's free-flowing data between all the parties in this transaction, and the data is immutable, then it is almost impossible for people to make at least misjudgments about the realities that exist. And so that would be a really positive change that we're making for the ecosystem. We're working with others to make for the ecosystem.
Yeah, and it seems like, and also a lot of what happened was, there was probably, data incompleteness and data inaccuracy, but there's probably also data editorialization that went on, meaning there were incentives for different people in the value chain to edit data, to modify data, to best conform to whatever their incentives were, right? To produce more loans or to produce more types of loans. And it seems like what you're saying is that if you can go direct to the source of truth, you limit the vulnerability to those, perverse incentives for actors in the production chain. I'm curious.
Exactly.
I'm curious today, right? So we're in a very weird environment today. And we're actually seeing a lot of activity, right, in housing markets. And I think that's surprised a lot of people. What are you seeing today? Like, what are you seeing on the ground in terms of mortgage production? What does that tell you about where the economy is going?
Well, we're seeing record refinance volumes because the industry is trying to fulfill a huge amount of demand that's coming their way from people who want to lower their rates from a year ago or 2 years ago or 3 years ago or 4 years ago, which I think I want to find ways to make that a more efficient process too, where if rates are suddenly plummeting and there's $4.5 trillion of loans that can be refinanced for the consumer's benefit, how do we make sure that happens in a cost-effective and time-effective way? that's a longer conversation, obviously. But then we are seeing a huge amount of purchase market volume happening as well, which was a surprise to me. I mean, when COVID first hit, we had an internal discussion about what does this mean for Blend and what does this mean for the housing market. And we look at MBA, Mortgage Bankers Association does their forecasts, Fannie and Freddie do their forecasts. I'm sure the Realtors Association does their forecasts, and we basically wrote off the purchase industry, and we said there's also a outlier scenario where the purchases go to basically zero. Now, that has not happened. In fact, it's been quite the opposite, where our purchase numbers are at an all-time high as well. And I think part of it also it might be, and again, this is speculation because I haven't gone and surveyed all these consumers, but it might be because we're seeing more and more people anecdotally going to new locations. Like you went to a new location. Like if you had a family and kids and you wanted to house them in a new location, you might want a house to do that. And if people are moving more to suburbs or moving out of the urban areas, which again, that's something that I think I see happening, but it's hard to say because I don't think we have concrete numbers on that, or I don't have concrete numbers on that. People are going to want houses in those areas. So like some of our biggest volume states for housing, for example, for Texas, are the ones that are growing the most. And the question is like, is that because people are escaping to Texas because there's so much land there? I don't know, but I would just say like, I think that there's some potentially something to dig deeper into there. As far as extrapolating to the rest of the economy, I don't know if I'm smart enough to extrapolate the housing trends to the whole economy. I will say that housing numbers look extremely promising. So at least that's a positive sign that hopefully will continue, and hopefully people will continue to be able to, live the American dream and buy a house when rates are at an all-time low, and hopefully that'll become an appreciating asset that can live in their families for decades.
And do you think that psychologically, like that physical mobility, so people like moving to another state, where they're moving to Texas, they're moving to Florida, or they're moving to get more land, some of the friction and some of the inhibition that people have about moving at all is like, oh my gosh, I have to sell a house. That's so painful. Then I got to find a new house. Then I got to get a mortgage on the house. Then I got to buy all this other stuff for the house. Like there's a friction to it. Do you think that, and this is more of a philosophical question, do you think that in lowering that consumer friction, just from a pain and inconvenience standpoint, we will actually, and we should see more mobility around how people move and the places they live? Do you think that's the net effect of it?
Yeah, I think as we take friction out of the process, we collectively as an industry, I should say, what's going to mean is that it's going to be cheaper to move, not just cheaper to move, but also, I think as on top of that, I think as companies work more and more remote, which even if, like, for example, even if Blend never goes fully remote and we always have some centralized teams for whatever reason, some subset of our population probably will be more remote than they were before. And I'm sure that could be true of Fifth Wall and others as well. And so as the world becomes more remote, the fear of not having the ability to get a job, like it used to be that if I was going to move to, if I'm a software engineer, If I wanted to go and move to Dallas, there's like 6 companies of reasonable software scale in Dallas. And it's like, what if those companies won't hire me? Then I'm in trouble. But now there's hundreds of companies that are remote. Even if Blend isn't, there's hundreds of companies that are remote. Now that fear of going into a market and not being able to get a job is slowly beginning to wane as people realize that more and more of the world's going remote. Now, I don't know if the whole world's going to go remote or just parts of it. But even if it's just parts of it, it makes that fear go away. And so I think that, plus in combination with taking friction out of this process, which will just mean costs will come out of this process for consumers in a big way, that's going to be a combination of factors that's going to cause so much decentralization of the entire country. Like there's all this centralization around urban areas. I mean, I would not want to be a shareholder in a big urban area right now, personally.
Yeah, and to some extent, it puts jurisdictions in competition with one another, not just around businesses, but around the knowledge workers, right? The people that can work just by talking to a computer all day. Because, it's almost like the cities and states used to court companies because they knew that when those companies moved to their jurisdiction, they got the benefit of those taxes, that employment base, and all that commerce. But if instead, it's kind of like the bring your own device to work, it's bring your own location to work. If that's the direction we're headed, it might be that cities say, well, why don't you work from Google from Boise or from Salt Lake or from wherever you want? And that the consumer is ultimately empowered to make a location decision that's not premised on where a company's based. And like untethering those two things has pretty profound like sociological effects, you know?
Yeah, it's going to be, my hunch is that the fallout from this is going to be 10 times worse than, not worse, actually. It's just going to be the world's going to be 10 times different than we think it's going to be
Yeah.
as a result. Like
Yeah.
people think it's just remote work, but I think the entire makeup of cities is going to completely change.
Yeah.
And look, we'll see how it plays out, but that freedom that you're describing, that it's just now beginning to exist, is going to have pretty profound impacts over the next couple decades.
And I think you're almost seeing that today, right? Where people almost overestimated the impact of this in the short term, but they probably massively underestimated the impact of it over a 3 to 5 year time horizon. Like what the US population looks like locationally, commercially, professionally, it could look so radically different. I'm curious, we talked a little bit about friction, right? The friction of getting a mortgage, and anyone who's ever bought a home gets that it's the most important and the highest friction product. And so alleviating that friction is a huge part of alleviating the friction of buying a house. But then there's all this other stuff. Like I remember when I got my closing statement on buying my house, I was like, what's this thing called title insurance? And I don't want a home warranty. There's all this just other stuff that comes with. How do you think about streamlining that? Because it's almost like the consumer is in this position where they have to interact with all these different products that they're not well equipped to understand, but yet they're forced to buy them all in combination to do this thing they actually want to do, which is move into this house or this condo. How do you think about aggregating and streamlining those manifold processes?
That's a great question. I think the idea that we would ever solve those problems, when I was talking earlier about some of the things that surprised me, one of the things that surprised me was how much opportunity there is to fix things in the ecosystem on top of the things of the lenders. Like many of these products that you're talking about, like how the real estate process works, how the appraisal process works, how the title agency works, how the closer works, how the moving service happens. Like all of these industries are pretty big industries and are, I would say, also just have a lot of opportunity to get better as entire industries. And like, one thing about Blend, which I think I didn't realize at the time that we would go after and try to help fix these industries with a lot of partnerships is like, now that we have 30% of the mortgage market on our platform and growing pretty fast, it opens up the door for us to have massive scale impact by picking one of these problems or two of these problems, having a small team go and do it, whether it's build, buy, or partner with some other group of people, whatever it is, and say, we're going to go fix this and we're going to do the same. We're going to give you the resources you need. We're going to let you run on your own. And we're decentralizing as a company too. I don't mean physically even, I mean just how we work. We're letting those teams run completely autonomously because we want those teams to, we want them to fit into our overall values and our overall mission, of course, but we want to have smart entrepreneurial people running those things so that they can drive fast outcomes, just like we are as an early stage company, to be able to do that forever. And so in order for us to do that, we have to give those smart people a lot of leeway to go after these pretty big industries, figure out the right solution. But then we, as a platform, have so much of the market running through our system now. And that impact they can help drive by having our customer base on it and having our technology as a foundation for it, it just creates so much opportunity. I mean, title is a good example of one where you think about the mortgage process being painful. The worst rated part of the mortgage process is actually the closing process, which is not, or in a lot of cases, not with every lender, but that's not even done by the mortgage company. That's done by the title agent. And so it's not the title agent's fault either. It's like they're emailing stuff back and forth until the last minute. And then you're going signing documents that were already signed with the lender, again, with the title agent. It's just like, these are just simple systems and data problems that, if solved, can create a massive opportunity for lenders, for title agents, for consumers. And ultimately what the consumer sees is like, they show up to their closing and actually do it over video like this. Or if they want to do it in person, it's a 15-minute closing where they're just walking through to understand the last few pieces of documentation with a human across from them, and they're picking up the keys and they're going to their house, and it becomes a celebratory event instead of like being in some dingy office or whatever. And so I think when I think about that title industry, I think about it as something that as an example, if we could use modern approaches to data, use modern approaches to bringing these things to a more modern experience like video technology, it completely changes those entire industries, and they're overdue for it in a lot of ways. And I think that they're excited about embracing some of that technology now because of COVID, which has been an accelerator to those things.
And has it been an accelerator in the same way that it's been an accelerant to, firms like Fifth Wall and like Blend realizing that we could actually do our business remotely? Like if you had asked me in February, hey, what's it going to be like if tomorrow everyone had to work remotely? My initial reaction would have been, that's going to be a disaster. Like we can't do that. That's a disaster. But, COVID thrust this outcome on all of us. We had to do it. We adapted and now it works. Is the same thing happening in the housing industry, in the mortgage industry? Like, is it that, realtors and mortgage brokers and closing agents, they're all like, well, I got to operate over Zoom, so I better figure out how to use digital tools that enable me to do what I used to do in person over a computer. Is that what's happening?
I think what's happened is some combination of consumers realizing that they can make more decisions virtually and not feel like, because I think that there are some old fashioned things about buying a home that make you feel like you want to go see and feel and touch the home, which many people still do. And I don't think we should stop them, but does the realtor need to be next to you when you do that is one question. But then there's also things like the closing. Well, maybe I didn't even think about it. I want to do my closing over video. Mm-hmm. 6 months ago, my parents, who are in their 70s, had never done a Zoom conference in their life. Now Zoom is the only way they see their friends. And if I told them 7 months ago, before COVID, that they could only see their friends via Zoom, they'd be like, no chance. I want to see my friends in person. But given the circumstances, they have no choice. And it's the same thing in this industry. Historically, there's been a lot of pushback on modern technology from existing people, because rightfully so, people believe that many consumers want to have a human touch in this process, and they're right. And the question is, how do we make the human touch work in a way that also works for the entire broader set of consumer desires, which not just everybody wanting to meet in person. Human touch for me can be this, human touch for you might be going in person, but giving the consumers the optionality. I would say the thing that banks and lenders have embraced, and title agents and everybody embraced more than anything else now, has been the willingness to create the optionality for the consumer to decide how they want to work. And that's so huge, because more and more consumers will get comfortable with this kind of technology over time, and that'll make the products cheaper. If I don't have to meet with you in person to close your loan, you meeting with me over video is so much cheaper than you driving to my house, taking an hour of your time driving here, signing some paperwork for an hour, driving back another hour. And it's like, you took 3 hours that I could have done in 15 minutes over video with you. And so I think that's the type of thing that it'll drive cost out of the ecosystem, drive friction out, and then it'll eventually make it so that consumers, to your earlier point, will be able to have the level of freedom that of being able to decide what they want for themselves, not just in how they close transactions, but where they even want to live and how they want to live as humans.
It's interesting to think about, because I think everyone in tech tends to think, well, people just don't want to talk to people. They just want to interact with a computer. And it's almost like what you're saying is the industry becomes systemically accommodative of all consumer preference. So you actually could do truly a analog closing process, should you so choose. Or you could choose to interact with nobody. And what's interesting is like just the corollaries there versus like the rest of tech, right? Where, I think about like e-commerce, like the first boom of e-commerce was like, well, people don't want to go to stores. They just want to buy everything online and not interact with a store or a store person or a store clerk or a checkout. But that was actually wrong. Now all the biggest omnichannel brands are saying, well, some people actually like to do that. Some people like to discover a product online and actually see it in the store so they can try it on. They want to be able to buy it online, return it in the store. It's like you have to be where the consumer is. You have to accommodate the consumer, and the consumer is many different things and has many different wants at many different periods in their life. It's just interesting that the corollary there. So,
yeah, I think this omni-channel trend and like that, creating that option for the consumer to shop however they want or check out however they want or whatever we're going to call it, that's here to stay. And I think that there's an open question as people become more distributed across the country, how retail keeps up with that. I don't know. Honestly, I'm not super familiar with retail. You probably know better than I would, but there is this thing in my mind where I'm like, everybody now realizes they have to serve the consumer, because if they don't serve the consumer, somebody else will.
Yeah.
Like there's competition. And competition in this case drives some people are going to be more and more forced to do business how the consumers want. and at the prices that make sense for consumers. And that's a train that has left the station now.
Yeah.
And so like whether or not if companies that are not on board, it's going to be hard for them to keep up with the companies that are coming after that.
And it's interesting that, like, the consumers in the driver's seat, the consumers calling the shots, and you think about that. Okay, that's kind of obvious when it comes to stocks. It's kind of a little less obvious when it comes to a mortgage. But what I'm hearing you say is it's actually true. And that almost empowering the consumer like that, and being able to deliver more data, like digitally to the lender from them, actually increases transparency and increases the velocity of money moving into the housing market. So it's interesting to think about all those synergies. Well, Nima, this has been really interesting. Thank you so much for taking the time to just share the experience of Blend, and thank you.
Yeah, thanks for having me. It's super fun to chat about this stuff, and yeah, excited to see where all this actually ends up going. Regardless of our pontifications, it's really interesting to watch from the sidelines in some ways, and in parts we get to be part of it, which is also awesome. And
yeah,
so grateful to be part of that as well.
Totally. Awesome. Well, thanks, Nima.
Yeah, thanks, Brendan. Have a good one.